And that matters because of what I'm about to say is, you're asking me, here we are near nominal all-time highs, well over 3,000, even on the spot, not just the futures.
Right.
It's, it's hard to just stand on an all-time high and say, "Yeah, it's going straight to the moon." I don't have a big red Bible that some other commentators might like to mash on TV.
Right. No,
Not
no.
myself. But what I'm saying though is that I think it's a mistake to say, "Oh, 3,000, that's it. It's got to go down." Honestly, I think it's a coin toss. That level that we're at now has already met many people's, targets, and I could see that triggering profit taking stops, and I can see that being the very thing that brings on the correction. The technical analyst would probably argue that. On the other paw, even a technical analyst would say that when you break through an all-time high, there is no ceiling.
Gold is near nominal all-time highs, surpassing $3,000 in both spot and futures markets. While some expect a correction at this level, assuming it must decline, there's no guarantee. Profit-taking could trigger a pullback, but breaking an all-time high also removes technical resistance, making further gains possible. There's no set ceiling, and the market remains unpredictable. Lobo Tiggre, also known as Louis James, is a seasoned investor, speculator, and financial analyst. He explains that central bank buying has created a strong foundation for gold, as it remains a persistent force in the market, unaffected by short-term economic or geopolitical shifts. Even if global tensions ease, countries like China and Russia will unlikely revert to relying on Western financial systems, reinforcing gold's long-term demand. Meanwhile, inflationary policies, rising global military spending, and trade tariffs contribute to a structurally higher inflation environment, supporting gold and silver as monetary metals. While short-term market downturns could trigger forced selling, long-term investors see these as buying opportunities, particularly as economic uncertainty increases. Watch the full video for more insights. If you enjoy the content, like and subscribe for the latest updates. Now, let's get back to the interview.
I do think it's important to remember that the central bank buying has really put a floor under there, and it continues. It's at a substantial level. It continues at an elevated level that we've seen since the quote unquote weaponization of the dollar, right? Even if Trump and Xi make a deal and they announce it tomorrow, China's not going to go back to thinking, oh, it's fine to have our financial life's blood regulated through New York and Washington, and certainly not the Russians, right? And the global South, so-called. So I think that I'm calling it a paradigm shift. It's a one-way door. I'm not saying that central bank buying will forever be elevated, but it is a force that's not going away. And it's really significant that you see times where there's things that would have in the past or recent past been headwinds for gold, the strong dollar, you can see dollar and gold going up at the same time. Or ironically, inflation going up, it's ironic because gold is an inflation hedge if you pull back and look at the big picture.
Right.
But short term, it doesn't correlate with inflation. So you see inflation going up and gold going up like an inflation hedge should. What's wrong with that? Well, it's because those old drivers are not the only player in the market anymore. And
Right.
I just think that's really, really important. So on top of anything else we might say about how great gold is, right? Remember that there is this, let's maybe not call it bedrock, but there's this really solid new buyer in the marketplace that's not going to go away for a long time. As a person in the marketplace, I care. It's hard to sell widgets if people are broke, and so all of that matters. But in the context of a metals speculator as a gold bug, I see a lot of this as really noise. Sure, tariff scare, geopolitical scare, any scare is good for a safe haven asset. Defining the marketplace and where we're going. I think the more important thing is to realize that the agenda in the United States,
It's okay,
unless it
bless.
pulls $1 trillion rabbit out of its hat in year one, unless that happens, which is a big ask, the agenda is inflationary, and the agenda globally is inflationary. European rearmament is inflationary.
No.
My biggest concern is actually, well, it's a concern and a hope at the same time as a contrarian. My biggest concern is I think the evidence is mounting that the Trump team is planning to front load the pain here and create a recession, or do all the harm they're going to do as much as they can, pack it in up front, so by the time the elections come around, then that pain will be receding in the rearview mirror, and maybe some of the good things that come from it. If deregulation and tax cuts and all these things are eventually good and they create growth, that takes time, but the immediate adjustment can be very difficult. The impact of the Doge firings, I think that's really just getting going. I think it will be substantial. and let me be careful here because I'm really not criticizing the reduction of government in the U.S. As a libertarian, as an anarchist libertarian, I've been wanting this for years.
Right.
I never imagined that somebody would go in with a sledgehammer, the way Elon or Milei's chainsaw, rather than the scalpel that you would think. So I understand why, and honestly, I think the scalpel approach probably wouldn't work if they were being super careful and making sure nothing went wrong. I think they'd still be picking the color of the curtains in the Doge office. Nothing was done yet. It was
Right.
sledgehammer or nothing. So I get it. I'm just saying there's a price to be paid for this. And if that's a hard landing or hard recession, this year in the months ahead, the odds of a major market, if not crash, at least reversal, are serious in that environment. Industrial commodities, they're even Dr. Copper, are likely to go into reverse. And even though uranium is already down already, it's an energy mineral. I think it could go lower just on a knee-jerk basis, even though it shouldn't. I could see that happening.
Right.
And even gold and silver, monetary metals. If there's a major liquidity event, people will sell their gold, not because they want to, but because they have to. The margin clerk's on the phone. and so we've seen that before. And that's why I say hope. If that happens, I am accumulating cash now, and I expect to be buying with both fists or pause, as the case may be. The tariffs, people like to say, oh, it's transitory, right? It's a one-off thing. The rate of increase is one-off, assuming there's no more tit for tat. But that doesn't mean prices go down. It means, that increase, that rate of increase, the tariff goes away. But the prices don't go down. But what really counts to me is, this new long-term buyer that we talked about, a highly inflationary outlook all around the world, and that's good for both monetary metals. You slipped the S word in there earlier. Yes, I do still see silver as a monetary metal, even though my friends call me Darth Silver. Yeah, I'm bullish on copper as well as gold this year. And it's impossible to be, in my mind, bullish on safe haven monetary metal gold and prime industrial metal copper and not be bullish on silver, which sits quite, and moves in the market squarely in between. And you can sort it. Like, let's say you want, gold, major producers only. And by the way, I want to know if they're exposed to Mexico or Panama or something
Oh,
else.
that's actually really nice.
You
That's
can
beneficial.
get that list, right? Or if you want, silver explorers only, I want, turbocharge my upside, right? You can get that list. And then you'll have a clear thumbs up or down on those companies, which can give you a shopping list. What I do promise is that it's an independent evaluation. There is no amount of money any company. So I work for my clients only. And so for what it's worth, that resource is there. I think most people have no idea what that is. I get an email like once a week. I subscribed and I had no idea what this was. It's so good, right?
Gold's future remains uncertain, but its strong fundamentals, driven by central bank demand, inflationary pressures, and geopolitical shifts, suggest continued long-term support. While short-term corrections are possible, the broader trend points to sustained interest in gold as a hedge against economic uncertainty. Investors should stay informed and consider risks and opportunities in the evolving market. How might central bank policies influence gold prices in the next few years? What factors could trigger a significant short-term correction in gold? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.